Hi, this is CPA Ted Lanzaro, and today I want to talk to you about how to calculate the gain on the sale of a property. I had a couple of clients just in the last few days approach me as to how to calculate a gain. They had kind of given me their gain calculations, and they were like way off. One person had put in, debt on the property, has nothing to do with the gain calculation. Another person was trying to factor in distributions to investors. That has nothing to do with the calculation of the gain on the sale of the property. So I figured I would do a video to show everybody how to accurately calculate the gain on the sale of the property, because it's the first step to developing strategies, is knowing what the gain is, right? So let me share my screen real quick. I'm going to give you the calculation right here. Um, so hopefully you can see the screen, how to calculate the realized gain on the sale of a property. It starts with knowing what the cost basis of the property is. So the cost basis of a property is the original purchase price plus the closing costs from the purchase statement, plus the cost of any CapEx that you've done on the property during the time you held the property. Okay, so all of the CapEx that you capitalize, meaning you put on the balance sheet and depreciated, not that you expense as repairs, but that you capitalize and put on the balance sheet, is also included, right? So once you have that number, then you subtract the amount of depreciation you've taken on the property, and that's your cost basis at the time of sale, okay? So then we move that number up and we put it right here. And we then calculate the selling price off the closing statement, or the estimated selling price from the offer. We can either take the closing expenses off the closing statement, or we can estimate them to come to a net selling price. When I say estimating with them, I'm talking about in advance. If you wanted to do an estimate of the gain in advance of the actual closing, we could estimate. So you come to a net selling price, then you get your cost basis from the worksheet below, and that's your gain on sale, right? And maybe you have some passive loss carryovers that would reduce the gain for taxable income on your return. But otherwise, this is how you calculate the gain on the sale. The gain on sale is total selling price minus closing expenses minus cost basis of the property equals the gain on sale. And once we know that, then we can start planning on strategies on how to minimize the tax on that. If you have any other questions, get a hold of me at ted@landmarkcpa.com. Have a great day.